Hi, my name is Murtanjay. Today we are going to discuss about introduction and industry overview and academic research on financial and non-financial data. Let's go ahead with the introduction. The term IBIS in the context of furniture retail in Australia. This industry reports which provides the various sectors including furniture retails. This report makes has a, or covers market size, industry perform, and key factor influencing businesses. In Australia, there are a few prominent stores such as IKEA, Harvey Norman, and Industry Future. They have their different wide range of furnitures and decoration, catering to the various consumers and unique style, pricing, and product selection, contributing to the competitiveness of Australian furniture retail market. Let's go ahead with the furniture retailing industry overview. Let's look at the current performance and outlook. Today, the as the report suggests, it has earned total revenue of as a industry it has earned as $11.9 D in 2023, and it represents a 1% growth in early, while the figures of 2022 and 21 are drastically higher at 3.8 and 16.2 respectively. Despite of cooling of the growth rate in revenue, the industry has witnessed a widened profit margin at 25% in 2023. This trend is expected to continue in the next 5 years. Industry revenue growth rate at modest at 1.9 annually, while furniture retailer companies would see the quarterly improvement in the profit margin annually up to 2028. Next characteristics is products and market. The there are many, like there are three top best selling products in the industry. First is lounge and dining room furniture. Second one, bedroom furniture. Third one, garden outdoor furniture. This product segment has showed the latest innovation, and it gives comfortable sleeping posture. Due to the rising demand for outdoor gardening, it is mainly driven from the COVID-19 restriction operating conditions. The furniture retail industry is one of the some industry benefited from COVID-19 due to the COVID-19 pandemic. Since having more disposable income because of government support and travel surplus, household have driven it to improving their houses. This trend has driven industry growth astonishingly high over the past 3 years, with a growth rate of 16.2. Cash rate target has increased by 4.25 BP over 1.5 years, while consumer price index stayed well above the target range at 5.5%. This is the Australian Bureau of Statistics has stated the target range. These have several determinants impact on the household disposable income, results in the downward trend of consumer segment segment index in 2023. Let's talk about the other characteristics. Competitive landscape. There are very competition uh, of landscapes. The furniture retail industry have low concentration and low barrier to entry, which leads to rising competition. The top four biggest market players include Harminovan, which is 19.8 market share. Second comes IKEA, 10.8% has a market share. Next comes BBQ SAM, which has 5% of market share, and Greenlit has a 5% market share. Harbino needs the industry thanks to the franchising operating model and widened stores network. However, the increasingly popularity of offline online stores in is likely to higher the computation. Next comes academic research on the impact of financial and non-financial information on the decision making process. Um, There are been wide range of research on the usefulness of financial and non-financial, which makes the person to decide on the based on the research, such has a role of finance and non-financial information determine individual investors to decide whether the company is good or bad and its future process. Mohammed has placed fino- on a crucial role that financial and non-financial data plays in the decision making process. The study points out the data helping build the preceding cooperation reputation, which guides investors and brokers in making buying and selling decision accordingly. Mohammed Javed to 2020. However, decision investment decisions that are based solely on the financial data presented are largely misleading because they ignore the impact of external environment such as market and industry trends, ESG factors, etc. Measure that matters non-financial performance by Jonathan Lowe and Tony, which has more than 3,600 downloads, has proven its validity till today. According to the research, more than third investors do not depend on financial data, but on the other information such as management quality, company vision, mission, innovation, and its ability to grow in future. Indeed, financial data such as ROE and ROA helps investor to evaluate the company's efficiency and profitability, whereas EPS and dividend yield helps to identify overvalued and undervalued stock. However, these figures measure the past performance, the future prospect of the company, which directly impact potential return from investors largely depend on the external environment such as the company reputation, strategy and sustainable program and so on. Thank you. The next part will be explained by my group member.
Hi, thank you for my workman for the industry overview and economic research on financial and industrial data. My name is Dan, and we'll continue the presentation to tell you about the comparison between Havenom and IKEA industry average on the financial performance. This is going to break down into the financial ratio related to profitability, efficiency, and average. Then I'll compare the Harvey Norman and IKEA performance on non-financial data and sustainability. Again, this will be subdivided into the sustainable people, products, and the sustainable environment. Lastly, I'll give you a better recommendation. Now let's start financial ratio. In terms of profitability, uh, revenue growth rate uh, between between 2020 to 2021, having almost show a dramatic change in revenue growth rate, which is less than 5% in 2020 and becomes more than 25% in 2021. And it's 5 times higher than the second competitor, IKEA. Look at net profit margin. During for 3 years in comparison, that 2021 and 2022. Harvey Norman has significantly outperformed for IKEA and industry average on the net profit margins. In 2022, the profit margin of uh, Harvey Norman stay at 30%. It's almost 30%, while the number for IKEA industry's average is less than 5%. Now, let's talk about efficiency. In comparison of revenue earned per employee, we can see Harvey Norman between 2020 and 2022. Harvey Norman have earned almost double revenue per employee compared with IKEA. However, in more recent years, it's a dip or a decrease of almost 27% to 658,000 per employee. However, it's still above the industry's average. The completely different picture can be seen when we compare days of inventory in hand and days of account payable. We can see that between over 3 years period, IKEA have about two times lower or shorter the days of inventory in hand compared with Harvey indicate that IKEA have a much more efficiency in inventory management. Also, look at days of account payable. Days of account payable for having mentioned training is about 55 days, but it decreasing to about about 45 days in 2022. This decreasing in days of account payable may have a negative impact on the company's current liquidity. Now, let's talk about the coverage and leverage ratio. In 2022, the figure for Harvey Norman solving the company is in an astonishing financial healthy. What it means is that the uh, interest coverage ratio of Harvey Norman is stay at 23.3 times. That's two times better than the IKEA and three times better than the industry average. Now, when we compare the total debt divided by EBITDA, we can see that Harvey Norman have about 13 times lower level of debt compared with the second competitor, IKEA. Uh, current ratio, current ratio show that Harvey Norman still in very good uh, financial health by having a healthy current ratio, which is twice with the current asset more than double the current liability, which is almost equal with industry average. The lower we can see in summary, the lower percentage use of debt of Harvey Norman may have two indications. The first one, if the upside is that it's contributing for the Harvey Norman current and long-term stability, that means lowering the fixed financial operations. However, it also means that Harvey Norman forgone the benefit of maximizing the investor's wealth by using financial leverage. Now, let's compare the two companies with sustainability. Sustainability. In this matter, I can have a argument on sustainability, the sustainable environment, and the sustainable of product initiating a real life solution. Let's talk about people. Harvey Norman focused on encourage gender equality by supporting women in sport. Harvey Norman is the main sponsor for the athlete, women athletes in the Olympics. It's also doing so by renaming the gender balance throughout the organization. We can see that 55% of the employees female and the rest is female. While while in contrast, IKEA cares about the improving well-being of its employees. It also developed a general policy for the people who suffer domestic violence, which they self-rely at home. It also created a program which called Stand for Refugee, which provide a skillful employment to help refugees to assimilate into a Australian working environment. Now, about the product. While I can focus on become or encourage a circular economy by launch AC store online. AC Store is a second-hand furniture store of IKEA. By launching online, it have to increase the sales of second-hand products. In financial 2022, 600,000 products have been sold or have been reused with China. I can also do so by increasing the availability of the furniture parts. They have to increase the durability and longevity of the furniture. In contrast, Harvey, Harvey Norman tried to reducing plastic bag and packaging. The road it become to pace out all of the small plastic bags at all these complexes and fun sizing store. It also working with the supplier for packaging solutions. Now let's talk about environment. IKEA environmental protections is very impactful compared with Harvey Norman. With the road that to by 2025, IKEA will be powered by 100% renewable energies across all of its value chains, and it's also tried to reduce its carbon emissions in transportation. IKEA, in fact, in 2019, it became the first home furnishing retailer that used EV home deliveries as sending service. This will be, this will become 100% EV by 2025. Now, let's talk about the recommendations. Based on the analysis today, we recommend a whole recommendation for a Harvey share because three reasons. First, a decreasing national demand for furniture retailing. Second, the intensify the competition of, from online data, which is lower profit margin. The unimpractical and rage about the sustainability of Harvey that may indicate some of the less credibility of its manager, which may have a negative impact on the future prospect of the company. And however, I would suggest we would suggest a investment or happening corporation bond, corporation bonds, because I mentioned before, Harvey have significantly lower amount of debt compared with EBITDA and lower revenue as well, which indicate that the company can take on or fulfill more of the long-term debt. Thank you for listening.